Welcome to the Everything Apartments podcast. I'm your host, Eric Christopher. I'm president of WSC Realty Advisors here in Long Beach, California, where I've been an apartment broker, owner, and property manager for the last 15 years. This podcast covers all aspects of multifamily investments, from buying and financing properties. We also cover day-to-day operations and management, and into reinvestment strategies to increase your net worth. We have a great show with a great guest today, so let's get right into it. As many of you know, I've been studying and visiting more and more of the out-of-state apartment markets. For example, in episode 6, we had a great visit with Alan Mendelsberg down in Tucson. Today, we're going to move north to Reno, Nevada. Today, we have with us bgalles, who is one of the top, if not the top, apartment broker in the Reno Sparks market, with Logic Commercial Real Estate, which is a powerful boutique firm in that market. And as we'll hear, Ben has been specializing in Reno apartment sales for over 17 years since he graduated from University of Nevada, Reno with a degree in accounting, much like the host. Outside of work, Ben is actively involved in the Northern Nevada community as a board member of Sierra Horse and Heroes and a youth basketball coach. And on weekends, Ben enjoys spending time in Lake Tahoe and attending the University of Nevada, Reno Wolfpack basketball games. Ben, thanks a lot for joining us today.
Thanks for having me here.
Great. As we spoke about, I had the luck and the chance to meet you, and it blows my mind that it was almost 10 months ago, September of last year. I flew up to Reno, and Ben was kind enough to spend a couple hours with me and take me around the city, which I really appreciated, really got a lot out of it. But before we get into that, Ben, tell us how you're the top, if not the top, one of the top apartment brokers in that market. And I know you attended University of Nevada, Reno, but give me just a couple bullet points on what brought you to Reno, just your travels up to where you are now.
My family has ties to Northern Nevada. I early on in life, I think from the time I was 1 to about 9, I was raised in the South Reno area, and then we moved to the Bay Area outside of Concord and Brentwood, California. And then when I graduated high school out there, my parents were moving out here, and UNR has a great school, so I just made the decision. All right, we'll go there, and I got an accounting degree at University of Nevada, Reno, but I was always kind of ambitious in school and I wanted to make money. So I actually got my real estate license by the time I was a junior, and I was making way more money than I could as a junior accountant at a firm. So I just kept doing it. So I've actually been licensed for over 20 years now.
Yeah, that's really interesting you say that, because we share the same degree. I got mine from Long Beach State down here. And just like you, as we were getting done with college, I don't know if this was the same kind of matriculation as you had, but the big 6 firms were coming in recruiting, and everybody's excited about becoming a junior accountant and just kind of working in the boiler room up to where they could make partner. And I too was in sales at the time. I'm going like, A, this seems kind of boring to do all day, every day. And B, right, I think I can make the money I want to way quicker. So never really worked in an accounting career. I don't know if you ended up doing some accounting for a while. That sounds like you just went into real estate. But yeah, that's certainly we share that. And unlike, I'm constantly astounded by how many brokers out there really aren't comfortable with numbers on an investment property. And it's like, how can that be, right? So you and I have an advantage when it comes to the P&Ls and the other numeric analysis. So you came into real estate while you're in college, and then were you specializing in apartments from day one, or how did you work that?
I didn't. I kind of went more generalist for quite a while. I like the numbers part of it, but I did do general commercial. And I always tell people all the different specialties in commercial real estate kind of have their own language, whether it be retail, industrial, office, or multifamily. And I always like the multifamily part of it. And I remember right around when the last cycle kind of started back in 2008 or 9 is when I really just specialized. And one of the top multifamily guys was, I saw him at the gym, and he's like, I think I'm winding down. I'm going to retire. And I'm like, all right, it's time to just full blown go specialize in that. So just been doing it ever since.
Beautiful. And then I see that you were at Cushman and Wakefield. Is that where you started at, or did you start somewhere else in college?
No, I started somewhere else. Cushman and Wakefield actually came into the market, I think around 2011 or 12, when they bought out a small boutique commercial firm called Trinity Commercial. And the broker at the time, Brian Arman, was an industrial broker, and he found the benefit of having the national flag. And at the time, in the down cycle, a lot of the banks wanted to use the national firms for their REOs, and I found it beneficial to go there. And I had listed quite a few REO properties during my time there.
Perfect. Yeah, that's an exciting time when you can latch onto some of that bank owned stuff. They're pragmatic about wanting to get rid of it, and you're there to help them.
Absolutely.
So then, at some point, at Logic, when did you arrive there?
I just arrived a little over 2 years ago.
Okay, great. Yeah, I was lucky enough to visit your office. Really, really great looking professional office space and whatnot. And that being said, as I mentioned, I got a chance to visit the market. I've been doing that. You may have listened to a couple episodes ago with Alan Mendelsberg down in Tucson, sort of the same idea, meeting the best brokers and property managers in the market. And again, going back, Ben was kind enough to put me in his car and just give me a really comprehensive tour of the Reno market area, which I got a lot out of. So when we were visiting back in September, it's hard to believe it's been that many months since, but give me a little heads up again on how has the Reno apartment market changed, let's say in the last 5 to 7 years, or maybe just in this uptrend that we've had with regards to the volume and pricing and just kind of maybe a few of the metrics.
Well, I mean, if we go back to like 2013, the second quarter of 2013, our vacancy was at 4.65%, which isn't a bad vacancy. I think they have the national average roughly around 5%. And now here we are, the second quarter of 2021, we're at 1.63. And in fact, after 2013, our vacancy hasn't been above 4% since then. So our vacancies have been pretty low, but also in that second quarter of 2013, the average apartment rents were $843, and now we're at $1,607. So we've nearly doubled the rents in the past 8 years in the market. And as far as sales price, I would say the average price per door back in 2013 was roughly about $45,000. And so far in 2021, we're averaging $158,000. And the second quarter average price per door was $166,000. So, I mean, we're definitely trending towards, a lot of deals trading at least at about $200,000 a door in the market. So, I mean, pricing wise, there's definitely a big upward push. Oh, and we've had a lot of the value add deals, or deals that could be value add deals, trade, at least in the traditional sense, where someone is really going in, going to do a full renovation of a property and then try and increase the value. Then I think a lot of what the value add deals are now are probably more management based, and either getting more skilled management in place to more efficiently manage properties and bump up rents. Because I think a lot of owners, especially owners that self manage, they get comfortable with tenants that pay on time, especially during COVID, and a lot of properties where the rents were way below market, they absolutely had no issues with payments in COVID. And in fact, in our market in general, we didn't really have a lot of issues with COVID non-payments. I think Johnson Perkins Griffin, who does the apartment survey up here, they had the weighted average at roughly like 5% of the tenants were having issues making rent payments. But with all of the government subsidies and money to help tenants in need that do have a challenge paying rent due to COVID, those programs have been great. If you have a cooperative tenant, I mean, I've seen owners getting $15,000, $20,000 checks, and it's really a benefit to both the landlord and the tenant. Because, I mean, I had one owner, they had a tenant that hadn't paid since October, and they got about a $15,000, $20,000 check. And not only did that tenant's rent get all made up, they paid 4 months in advance. And so, anyways, there's some good programs with that out there in the market too right now.
Yeah, no, on that note, we've been subject to quite a few eviction moratoriums, and it's still in place now. We were supposed to see an end to that on the 30th of June. and that's since been extended to the end of September. A lot of people feel like that may even get kicked into next year. What kind of, let's say, government intervention do you have right now that's been surrounding the COVID conundrum?
In the state of Nevada, they do not have an eviction moratorium at the moment. So, landlords are free to evict for whatever. And really, the what they've specifically put the moratorium on is the evictions for non-payment. So you could still do evictions for nuisance or any of the other things that you can do as far as getting tenants out. You could even still do 30-day no cause evictions, which in the state of Nevada, if a tenant, if an owner wants access to a unit and the tenant's on a month-to-month lease, you can give them a 30-day no cause and have access to the unit to renovate it or do whatever you want to with it.
Yeah, and that kind of leads into another question around kind of the makeup of your state and local governments. Obviously, we live in the most left-leaning state in the nation. I can't imagine one that's further, where we've got a Democratic governor who is right now in the middle of a recall scenario, but it percolates down all the way like into a city like Long Beach, where we have heavily left-leaning mayor, most of the city council, and that comes out in the wash with their posture toward landlords versus tenants. Now, what's it like in Nevada, say, just percolating down from the state level to the local level? How do you feel they're treating landlords in general?
Nevada has historically been a GOP state, and it is starting to kind of go the other way, just especially with the influx of population coming out of all over the West Coast, California, Oregon. We do have a Democratic governor at the moment, but in general, the laws are still very much business friendly. No state income tax, eviction laws for landlords. You can do a 7-day no pay eviction. And so it really is, a very much business friendly state.
No, that's good to hear. And obviously, a lot of states are starting to see the demographic shift, maybe to where there's a change in the leaning of the voter constituency. You've heard maybe on the news like Texas, and then I still got friends in Arizona that still can't believe that Biden won that state, and that's a whole conversation for another day. But certainly California out migration is bound to change things a little, but it's good to hear that your state still has a common sense level approach to doing business, to running rental properties, which I think a lot of us here in California have seen kind of go by the wayside at this point. So let me ask you this: when I was there, I was driving around, did 2 days of driving around, and you introduced me to the downtown area, and then I believe it's called the Midtown, or what was it, below the river?
Yep,
Midtown, which was kind of cool because you see a lot of the gentrification, a lot of the cool restaurants. I ended up having dinner and actually breakfast in that neighborhood just because it just looked like there's a lot of boutique-y stuff now. And just looking back, give me a little bit on the rings on the tree with Reno, because the downtown area, from what I've read and just the look and feel of it, looks ripe for a big redevelopment project, which I think you mentioned, or I read that was kind of on the launch pad right before COVID hit. What do you think is, let's say, crystal ball, 5 to 7, 10 years? What does downtown and relation to the other sections of town look like in Reno coming up?
Reno's Midtown district really has transformed, and it's the area south of the casinos, between Plum Lane and California Avenue. And part of that section is what's always been considered Old Southwest Reno, which has always, been a really popular rental submarket for tenants and landlords, and properties there usually will trade for a premium and they'll rent for a premium. It's kind of extended to the east end of Virginia as well. And so that area has seen some significant improvement and some really nice places. But in general, there's not a lot of national retailers or restaurants in that Midtown area. There really is a strong push for regional restaurants, breweries, retail stores. So it's actually a pretty cool area to hang out. A lot of great coffee shops. Um, and so and the rents continue to grow, and as far as older, more established properties, I mean, they're getting fantastic rents. I mean, I think your average one bedroom, like 500 square foot apartment unit is approaching 1,400 to 1,500 a month in that sub market.
Wow.
And as far as redevelopment projects in the downtown corridor, the west of downtown area, there's a developer by the name of Jeff Jacobs. He acquired the Sands Regency Casino and the Gold Dust West, which were probably two of the dirtier casinos in the downtown area. But he quietly assembled over 40 properties in the downtown area. And they haven't announced their full plans, although they are dubbing it the Neon Line District. And it was in the Wall Street Journal how he was going to invest over $1 billion in downtown Reno. So when those plans start coming out, I think it's going to be pretty exciting. I think in some of the outlining areas, Cromer, who's one of the largest apartment owners in Northern Nevada, they're building kind of a mid-rise project just south of that area, close to the Truckee River. And also the owners of the Mod are extending that. And the Mod or micro units where they've got like 225 to 325 square foot studios that are renting anywhere from the 1,200 to 1,500 rent level. So there's a lot of exciting things happening in the downtown area.
Yeah, it looks as though it's ripe for that, and by many people's standards, when they think Reno, the beacon light in Reno was Harrah's Hotel and Casino. When we were there, you mentioned, and I noticed that it was shut down, and I believe you told me that was being turned into residential with retail in the old casino space or something. So
yeah. So Harrah's has two towers. One tower they're completely gutting and they're starting the full remodel. The other one, they had a demand for housing, so they're doing short-term housing there. So it's somewhat of a still of a hotel type setup, but they are doing monthly rentals, and the monthly rentals for a hotel unit are around $2,000 a month. And they've seen some heavy demand for that, especially Tesla, Panasonic are supposedly going to be opening up the Gigafactory 2 outside of Austin, Texas. And so I know they're training a lot of people in Northern Nevada at the Gigafactory here to go down there. And so occupancy on that second tower are still very high, and they got $100 million loan to do the remodel. So it's gonna be a pretty significant project.
No, that brings up an interesting point. Is with the influx of the technology side, Tesla, et cetera, out there at the Reno Tahoe and Industrial Park, brings the demand for Class A housing, which it sounds like that component is being met in the Class A stuff and the redevelopment downtown and the new stuff that will come up. And then when you flip the page, it's a lot like Long Beach, because we have a similar dynamic down on Ocean Boulevard where there's two new towers that were just constructed for rental. And those studios, and they have a small movie theater, tons of amenities, but still a studio unit for $2,000 a month. And then most of our city, a lot of the buildings I saw in Reno reminded me of Long Beach. A lot of the neighborhoods that I drove through with your, let's say, 60s construction, 8 units. Your town, which you mentioned, is really heavy in one bedrooms. I mean, because here it's a little bit more of a mix with 1 and 2s. Well, a lot of studios, 1s and 2s, not that many 3s, but a lot of the sales reports that I've read from you, it looks like it's heavy 1 bedrooms there.
Yeah, I would say that probably 60 to 65% of all the units in the market are probably 1 bedroom apartment units. And so, obviously investors like more properties that are primarily 2 bedroom units because people have more room and they can accumulate more stuff. Whereas a kind of studio, you don't have a lot of stuff. So it's easier to move out of a studio than it is a 2 bedroom. And so, when a lot of people look in the market, they are looking for properties primarily 2 bedrooms, but we just have a lot of 1 bedroom properties. There is pretty heavy demand for those in this market.
Sure. No, there's a lot of good looking properties, especially in the Midtown area, where it seems like that's where your biggest cluster of stock is, right? In town, is maybe running down Virginia, up and down the streets as you go south. You get a feel of being in a market like Long Beach, like as I mentioned. and just a good looking demographic. Also, I got a chance to get over your way into the Spark side, which also looks like a great rental market. Is there any differences you can kind of point out between Reno proper and Sparks as far as market performance?
Well, what you're seeing in the market is actually most of the sub 100 unit properties are within the McCarran Loop, which makes a big loop around Reno and Sparks. And so, as far as the land to develop brand new units, it's South Reno, North Valley, and Sparks. And East Sparks actually has the highest average per unit rents in the entire market. That's a little skewed because that's where the land is to build a lot of the new Class A projects. And so, just off of Interstate 80, we've got the big Legends outlet mall. They've got the IMAX movie theater. They have a 250,000 square foot Scheels sporting goods store, a lot of brand new retail. And they also have roughly 3,000 to 4,000 doors under construction. And all those are Class A projects getting really good rents. And then the other area where there's a lot of development is in the Victorian Square area of Sparks, which is basically the downtown area. And we just had our first high-rise multifamily development completed, which is the Deco. And it's a pretty awesome project because they have an Art Deco kind of theme. So you walk in feeling like you're in the Great Gatsby and with the decor and all that kind of stuff. And they're getting very premium rents for this market. In fact, I think that developer wishes they probably had more penthouses because within the first month and a half, all their penthouses were leased at roughly 2,800 to 3,200 for a 2-bedroom unit. So Sparks has a lot of interesting things. We actually did have one of the newer projects trade this year, a 300 unit Class A project out in the Wingfield part of Sparks, traded at over 300 a door. And it also traded at a 4.5 cap stabilized. And that was 2019 completion.
The Class A stuff, is that getting, from the tenancy side, is that getting gobbled up by the tech industry mostly, or who is filling all this new Class A product?
I think that's part of it. I've talked with the developers of the Deco in some in-depth talks, and they actually get because they're really close walking distance to the Sparks Nugget Casino, and they actually get people that just want a place to stay for the weekends, whether that's to go up to Tahoe or do whatever in Reno or gamble at one of the casinos. But I think tech tech employees are probably a big part of that, and just young professionals, because the job market up here is really strong. I mean, even before the past couple months where we've seen a real shortage in retail labor, we've got a lot of engineers moving out here for various companies. And the other thing is we get a lot of logistics and distribution type of businesses. So a lot of the supervisors in those companies, they get paid pretty well. And we have Amazon's got about 1 million square feet under roof. Walmart's got 1 million square foot distribution centers, Zulily, Chewy.com. A lot of those big online retailers have distribution centers up here. And that's one of the big factors that's growing our job market.
Sure, it makes sense. I mean, if you're a California business owner and you don't necessarily have to be here, you have a bunch of payroll, and you're looking at quality of life for the people that are working with you, vis-a-vis the wage structure. I mean, it's hard to believe anybody that couldn't move to somewhere like Nevada or Arizona wouldn't do it. And I think, along with the changes we're seeing in Arizona and Nevada, it's like companies are crossing state lines for more, let's say, calmer pastures with regard to government overreach. And what are they doing? Taking their employees with them. And we're seeing a lot of that changing the apartment markets in these states, where 10 or 15 years ago, it was nothing like that.
Yeah.
Let me ask you this. I was talking to a really great broker down in Tucson. You'd love this guy, Alan Mendelsberg. And he's telling me that there's enough demand in his market that if a property gets listed and it's on the market for more than 2 weeks, there's something wrong with it, or it's just massively overpriced. Like he's telling me 8, 10, 12 offers in a week or two's time. How's that cycle going with you when you list a property? Is it just gone in 60 seconds, or do you have a price structure that's balanced where it takes maybe like a normal time to sell a property?
No, it's intense up here right now. I just actually listed a property that from list to close, it was 30 days. And that property had foundation issues. Two out of the three buildings needed new roofs. And so, it was a reasonable seller though, and buyer with a cash deal. And that's kind of an abnormal transaction. But in general, I would say, yeah, if a property right now is on the market more than 2 weeks, then there's some kind of hair on the deal, and sometimes it's a property, sometimes it's an owner who has specific terms that he's looking for, where maybe the market isn't quite ready to meet that. And so you deal with a lot of stuff, but in general, I mean, I'd say probably a good 45% of all the multifamily transactions over 5 units in Northern Nevada trade off market. But sellers are starting to get a little savvy, and I think they're all seeing kind of the benefit of taking a property to market, even if they're getting disturbed by people driving by their property, or walking around a property or whatnot. I mean, if you can get an extra 5-10% on the price, I think those owners are doing it right now. So it's a little harder to do off market transactions in our market right now.
Interesting. There's always that paradigm between the owner, for whatever reason, just doesn't want to endure the listing process, even though at times you can plainly see that they would make 10 or 15% more. There's just those folks that don't want to do it, but they'll sell the property to the right buyer. Now, with time on the market and how fast the supply gets eaten up, naturally the cap rates are compressed. I mean, what do you think your average cap rate's running right now?
I mean, we're sub 5 in our market right now, but a lot of them are value add deals where after renovation and stabilization, you're over a 6% cap. But stabilized multifamily assets that are at market rents are still probably trading in the 4.5 to 5 cap range right now.
Yeah, interesting, because in Long Beach, we're still skirting right around sub 5 cap. Your tougher stuff could be 5.25, 5.5, and then your nicer stuff could be down as low as or high threes. What I heard in both Phoenix and Tucson is over the course of the last year, they've seen their cap rates compressed by a full point or so. When I visited Tucson originally, you could find a high 6 cap, just a medium grade, nothing fancy building, 6.5, 6.75 cap. And I took a look at it 2 weeks ago, and it looks like they've dropped. Is that kind of the same dynamic as you've experienced up there?
Yeah, and just with the market pressure and the low interest rates, I mean, we're definitely seeing that the cap rate compression. I mean, as far as the past few multifamily deals that I've sold, I mean, all of them, the interest rates have been sub 4. I had one deal trade where they got about a $3 million loan, and it closed in April, but they locked their rate in January, and they had a 2.9% rate fixed for 10 years. And so, I mean, I think it's hard for buyers to unless they're getting a screaming deal on a property to not get the debt going in, because the rates are so incredible on acquisition debt.
Yeah, it's really blown my mind. I figured by now we would have seen the rates tick back up to, let's say, a norm level. And I certainly thought that when the COVID thing smacked us in the face, that we were going to see a lot of gyrations in the debt market. And it's astounded me that these interest rates have stayed where they are. And on the debt side, do 75% LTV up there? Does the price and the income support that? Or like, where's your loan dollars usually stack up?
I think most deals are probably having to get 60-65% LTV debt, just because we're not trading at high enough cap rates where they can get the proper debt coverage ratio. So, that's in general where I'm seeing them. I'm starting to see a few deals get closer to the 70% LTV, but in general, I think you're probably in the 60-65%.
Yeah, and that seems to be what I've heard in most of the markets. We've kind of ticked a little lower LTV here on just the spread between the income. Like you're saying, it's driven more off of the debt coverage than it is the LTV. Now, lots of California buyers coming in. Tough to enter right now?
It's tough to enter. It really is. I think you got to be a ready, willing, and able buyer from day one, and a lot of people aren't, right? I mean, you start looking at a market, you want to understand the metrics, the rental market, the sales side of things, get an idea of what you can rent these for, what they should be paying for them, what kind of debt they can get on it. And so I think it's a little bit of a process, especially with like you said, a lot of the influx of California buyers into the market, kind of getting acquainted with it. But I mean, I seem to still find a decent amount of inventory for people to acquire, and so I think I've got a great relationship because given that this is my specialty, I can call owners once or twice a year, so I've got a pretty good gauge on who would be or who isn't a seller in the market. So I try and stay on top of it as best I can, but I do feel like I could probably sell just about any property right now. I pick up probably one or two new buyers a day, specifically out of California.
Just calling you right up.
Just calling me.
Not a bad problem to have as long as you can balance that with the supply. Now, talking about these buyers coming in from California, what do you think it is that they seem to not understand coming across state lines, maybe a difference from what they're used to owning, managing here? Do you got a couple of things that maybe somebody could be wise to understand before they struck into Nevada that they don't have here or something like that?
I think understanding the landlord laws is huge. Understanding the different programs. I think a lot of people that have owned apartments in California, they're not as open to acquiring properties that have tenants on a voucher system like a Section 8. Most of the owners that I've dealt with really like a lot of the Section 8 programs and the voucher programs in the state of Nevada. I don't know if there's a huge difference between the two, but the Reno Housing Authority, which is the local group that kind of deals with it, they just got funding to do like another 1,000 to 2,000 vouchers in the market, and they just need owners to take them. But when you have a 1.63% vacancy, it's tough to find owners that are willing to take that. But I'd say that would be probably one of the bigger things, and then just understanding the different submarkets and the different areas, because a lot of people, Reno and Sparks gets the publicity, but there's some outlining areas that are really nice, like Carson City, Fernley, Fallon, which has the Top Gun Naval Academy, which will be featured in the Top Gun 2 movie with Tom Cruise coming up here I don't know when that's supposed to come out, but it's supposed to be coming out pretty soon. So, but a lot of the outlining markets are pretty excited because, the bottom line is that the Tahoe Reno Industrial Center is a huge industrial park, a lot of acres, and they don't allow any long-term housing there. So in terms of multifamily properties, that means that the people that work out there got to live in one of the outlining areas. And like you said, from Reno, it's about a 25-minute drive. From Fernley, it's about a 20-minute drive. From Carson City, it's about a 40-minute drive. But, for those kind of commutes from somebody in the Bay Area that's used to driving 2 hours into work, it's nothing.
Yeah. So basically what I'm hearing is that Reno Tahoe Industrial Park is basically going to continue to seed your rental market for years to come.
I think so. One of the interesting projects that's out there is Blockchains LLC bought the last 65,000 acres of that park to complete the developers' sales of the development, and they've made a lot of interesting noise out there. Their initial plans were to build one of the first smart cities in the whole world, and part of their plans were to build multifamily, but the CCNRs of the industrial park do not allow any long-term housing over 30 days, and so they actually had tried to introduce some legislation to the state of Nevada, where if a tech company had some innovative technology and owned more than 50,000 acres in the state of Nevada, they could basically create their own government. And that's kind of how they were trying to get away with being able to build long-term housing in the industrial park. I don't know if that's going to get approved. They did go back to have more studies done, whether that is something that's feasible or that the state wants or that the people want. But that would be something interesting to kind of keep an eye on, because that is going to be, once they actually start doing something, building some kind of facility or building some kind of city, it's going to be pretty interesting.
No, it sounds really innovative and interesting, and you got the companies and the capital coming across to do it. So that's definitely something to keep on the radar. But for now, you got an increasing renter base coming from the development and the expansion of that industrial park, which is kind of a positive development for your submarket. Let's leave it there. Ben, I really appreciate you being on today. And what I'm going to do in the show notes is I'm going to put your contact information, phone number, and email, so that anybody that's listening, for more information on the Reno market, I'm sure Ben would love to tell you more about it and take you any direction you want to go. So definitely that'll be a good resource for you to keep track of. And I appreciate everyone listening today. Again, my name's Eric Christopher on the Everything Apartments podcast. Thanks for joining us.